The stock market is the world's biggest casino. Now, casinos are closed. There's no sports going on, so no one can do their sports betting. And the thing is, as humans, we love gambling. We love getting that hit of dopamine. So, where's all the gambling happening these days? Well, it's happening in the world's biggest casino, the stock market. These days, investing in the stock is just as easy as throwing on your favorite playlist on Spotify. If you go look on apps like RobinHood and the Cash App, you can see that they have an investing platform that's very simple. It looks really nice. It has the little logos of every company, and you can just click and you have a stock. And the thing about these new investor platforms is they make it so easy. You can buy fractional shares. So if an Apple share is over $300 and you don't have $300 and you just want to put $5 in, you can throw $5 in and get a percentage of a share. There's also zero commissions, and this kind of changed the game. A couple years ago, when you're looking to buy a stock, you're also thinking about the fact that you're paying a commission on every trade you make. So it kind of makes you a little more hesitant to make a trade because you don't want to be incurring too many fees. Because if you incur more fees, that means you have less money to invest and grow over time. So with this new game of investing, it has brought a lot of beginner retail investors into the market. And right now, a lot of people are unemployed, they have time at home, they want to find ways to make money easily at home. You can obviously see these types of people on YouTube selling their classes. Investing has kind of become like a mainstream activity. I think this is a little dangerous. A lot of people are investing without doing proper research. They don't really know what they're doing. They know iPhones are made by Apple, so yeah, I'm going to buy some Apple shares. They really don't know what else is really behind who they're investing in. It's crazy. Since the lows in March, the S&P 500, for example, has gone up around 44% at the time of filming this. And that's crazy because of course, we're still in a crisis right now. There's a virus that's still spreading at a crazy alarming rate. Why are stocks going up like 44% in a couple months? And I think the reason why a lot of these stocks have been increasing is because of the power of something called retail investors. Retail investors are usually like beginner investors. They do it from their home. They're not handling huge sums of money, but all the small investors together make up a great percentage of the market. So there's millions of new retail investors these days. Like I'm technically a retail investor just because I'm not doing it professionally. I do it on the side. A lot of people think they are investors these days, but they really aren't. They're more of gamblers or speculators. They are not really investing their money based on fundamentals. Here's what you kind of hear from new investors these days. They say things like,
okay, welcome back to Easy Money Lifestyle Vlogs. I'm here to remind you that everybody's making money on the stock market right now. We got apps making it easier than ever. Sign up for an app, throw some money in there. You're gonna make so much cash, okay? Now's the time. Everybody's doing it, okay? Everybody's making money, it's easy. The stock market right now is so easy. You can close your eyes, pick a stock, you'll make money. I just wish I had more money to put in. It's so easy.
so if you check it out, I got Robinhood open right there. And the cool thing about Robinhood is you can trade and make money while wearing a bandana. You open Robinhood, it tells you, hey Adam, stock's up 20% today. You gotta buy it. You look the next day, it's up another 5%, you're up. It's crazy. All you do is open the app, you buy the stock it tells you, and you're there, and you're winning, you're making money. I don't know, I think this is my new career, this is my new lifestyle, bandana life. So when these things start being said, it's not a great sign. Investing is not easy, and I think a lot of people are going to be learning a really harsh lesson very soon. Unless COVID-19 suddenly disappears or there's a vaccine that's accessible to everyone, it doesn't seem like in this year the world is going to change very much. It might get a little worse from here. So why is the stock market going up? The stock market prices its shares based on what it thinks a company will be worth in like 3 months, 6 months, 9 months, or even a year from now. When you're buying a stock, you're paying for the price of a reflection of where the company is going. Some of our professional investors, like the big guys, the ones with the big money, they have been on the sidelines during this bull run and during the market increase. And they missed out on all these massive gains. When all the big investors, the professional ones that really know what they're doing are on the sidelines, but the market is still going up, it must mean that retail investors are really what's pushing this market. Our economy and our stock market, they're not really the same. So if the stock market is going up, it doesn't mean the economy is doing well. Always remember, if a stock is going up, it can go down twice or even triple as fast. And you need to remember that stock markets do not go up forever. There's always downturns. When beginner investors see that their stock has dropped so much, they panic and they're like, oh my God, I can't lose any more money, and they sell it off. But really what should be done when stocks drop, if you really know about the company and you believe in it in a long-term strategy, you should be buying more during the dips. But in this case, I do not think that's going to happen. When there's a drop, it's going to keep dropping, and it's not going to be good. Since the beginning of this crisis, RobinHood and the Cash App, their user growth has skyrocketed. So it just means tons of people are on these apps right now. I've been an investor for about 4 years, and I know there's a lot of beginners out there, so I just want to share something that I learned when I started. I got into it, threw some money in, threw what I had in, and it all went up a lot. I was putting money into cannabis stocks and tech stocks, and they were all going up, and it was awesome. I was like,
this is easy. Do I even need a job? This is so easy.
And when you start saying things like this is easy, that's when it's a bad sign, and that's when things are about to change. I saw a couple of my stocks drop, maybe 20% in a day, the next day another 15%, and you know you're not supposed to sell. But when you see that happening, and it's your first time experiencing that, it's very hard not to panic and press sell. And check out this example. So if we're comparing two stocks, two companies that hopefully you know, we have Apple and then we have Chipotle. So I'll pull up Apple's stock here. Right now they are trading over $300. So it's a pretty high share price, right? For one stock. And next up, we'll look at the Chipotle stock. So Chipotle stock is in the 900s. Wow. So you're looking at $900 for a Chipotle stock, 300s for an Apple stock. Why is Chipotle more expensive? Are burritos worth more than iPhones? For investing, you cannot just look at the stock price. The stock price doesn't mean something's more valuable. If you're out shopping, a nicer item costs more. A not so quality item costs less. That's what we're trained to do. Organic food, more. Non-organic, less. The thing about stocks is stock prices do not work like that. You need to look at the market capitalization of a company. That's how you know how much it's valued at. So, going back to our stock price here, Apple has a market capitalization of about 1.4 trillion. So, the stock market values Apple as a company to be worth 1.4 trillion. And if you look at Chipotle, their market cap is only 27 billion. So, tiny company compared to Apple.
Tiny.
The thing is, the stock price higher.
But why?
Chipotle has less shares outstanding on the market. And the way supply and demand works is when there's less of a product, the price goes up. So Chipotle, amazing high share price, but doesn't mean it's worth more than Apple. And this goes into my next point. Do not make investment decisions without doing the proper research. And the problem is, if you've gotten lucky recently, eventually you're gonna get unlucky. You need to think about fundamentals. So what are those? Company fundamentals are financial information and management commentary as reported in quarterly or annual statements and in press releases. So the company always releases news and facts. And what I've noticed on these apps is that most of them do not provide this type of information. They don't make it seem necessary. What they do instead is they have, just like the Spotify comparison, they'll show top movers on the market, the companies that have gained the most in one day or lost the most in one day, or they're grouping them into like almost playlists. They have the transportation stocks, and then you got the tech stocks, and then you got the food stocks. When they show that a stock has a 20% increase in one day, it induces FOMO, fear of missing out. So if you see that a stock is up 20%, you're like,
Oh my god. I need to get in on that. I need to get in on that right now. Also, I'm gonna miss out on the next 20%.
let's talk about a company that's been in the news lately, Hertz. They recently filed for bankruptcy protection at the very end of May. And it's weird because after they made this announcement, their stock started going up. It makes no sense. The company is struggling. They need to figure out how to stay afloat, and the stock price is going up. On apps like RobinHood and the Cash App, it was showing Hertz as a top mover. So people would see that it's going up 20% in one day. They may not even know the news of what's going on, and they just bought it. Or they are just a bunch of speculators, and they decide that, if Hertz turns it around, it could be a good investment. Kind of risky, kind of a gamble. So since the stock price went up so much in so little time, Hertz decided to get kind of creative, and they decided to make a share offering. So how that works is, if a company wants to raise more money, they can go for some debt, they can take out some loans, or they can even issue more shares on the market. They can sell a bunch of shares at the current market price and get that money back. The thing is, if you are a shareholder of a company that decides to issue shares on the market, it's not the best news. And usually when a company announces this, the stock prices go down. Because when you're a shareholder, you own a piece of a company. And when suddenly there's more pieces of that company available to be sold, each piece that you own is now worth a little less. So yeah, they call this dilution. So Hertz, they wanted to raise around $500 million, I believe. The thing is, the stock price was only up because of a bunch of FOMO. Based on fundamentals, Hertz was not a good investment and did not deserve going up so much. Over the last few weeks, when the Hertz made the announcement of the bankruptcy protection, they were hovering around 60 cents. And then they peaked around $5.50. That's crazy. The company went up so much, $5.50 a share. So Hertz was kind of making a smart move by trying to raise money when their stock price was so high. But the SEC filed a complaint about this, and they did not really recommend that they make this move. So after that, their share price kind of went back down. It's around 180, I believe, right now. Hertz is in a little bit of trouble as a company. They have a lot of debt. They're trying to figure out how to pay off. This raise of money would have been a great way out of this. But yeah, the SEC is there for a reason, and I'm glad they stepped in and made their comments. Now Hertz is going to have to go back to the drawing board because the SEC was criticizing their move. They're going to have to figure out a new way to issue some more money to keep themselves afloat. But all in all, dilution is not the best thing. You never want to see dilution as a shareholder. And companies don't usually dilute once they're established. They don't really need to. They've got their funding to scale up. So going back to Chipotle, there's less shares on the market for Chipotle. That's why their stock price is in the 900s. But Apple as a company is worth more. But there's just more stocks available of Apple, and that's why the price is lower. Investing, we all have heard, it's a great thing to do. And it is if you do it right. If you have money right now that's important to you and you don't want to lose it, make sure you're putting money into companies that you are going to hold for a long time. Buying and holding long is way better than trying to time the market. If you try to time the market, there's a chance that you're going to lose. Remember, if you're buying and holding long, you only have to bet once. But if you're trying to time the market, you have to get the right timing on when to buy, and you have to get the right timing on when to sell. So you have to be right twice. That's a little harder than it sounds. Just because apps like RobinHood The Cash App show that Hertz's price is going up 20%, it doesn't mean it's a good investment. To finalize all this, when markets go up, everyone feels like a genius. I've been making a lot of money on Hertz. I think it's the stock of the year. Take your life savings, put it in Hertz. It can't go anywhere but up. I swear. You got this. Easy Money Vlogs out. Right now, airlines are facing major hurdles. The greatest investor of all time, Warren Buffett, sold all his airline stocks. And what has happened since then? They dropped for a bit and then now they're up. Does that make any sense? The world's greatest investor. People think they're smarter than him? I don't know. Not going to end well. Someone like Warren Buffett makes a big move like that, we should all be paying attention. And instead, everyone's looking the other way. I think airlines, there's a couple of them that are good for the long term, but right now there's so much uncertainty out there. There's no one traveling. These companies are offering buyout packages to their employees. So for now, the fundamentals of the company have remained unchanged. There's a company that had no change in fundamentals deserve to have their stock go up like 100% in a short amount of time. No. So what I think is going to happen in the coming weeks or coming months is that a lot of these retail investors are going to be spooked and our markets could be dropping back down to a level that we saw around the end of March. But who actually knows? That's the thing about investing. I could be completely wrong. This market could keep going up, could keep running. We'll see. We'll see. Very interesting times we live in right now. It may feel great that you're winning right now, but you could be setting yourself up for long-term struggles.
So one more thing. Today I was at Chipotle and I had a really nice burrito. And I thought to myself, is Chipotle trading on RobinHood? And I checked and it was. So I decided, Chipotle, really good burrito today, better than usual. Last time I went, not so good, but today it was good. So based on that, I bought some shares. You know, maybe their burritos are gonna be better over time. And yeah, I love burritos so much, so now I got burrito stocks. So just want to say, Adam, thanks for having me on the show. Easy Money Vlogs, giving you the best advice. Here we go. And don't forget, subscribe to Adam as well. Adam's pretty cool.
So that's it for me today. I try to keep this video short, but there's just too much to talk about. And I think I'll try to get some shorter investing videos coming up. But also, let me know about this Easy Money Vlogs guy. I know he's a little whack, he's a little crazy, but let's use him as a learning experience. He thinks he knows what he's talking about, and he really doesn't. And that's what's happening these days. A lot of people think they are making so much money, they think it's easy, but that's gonna come crashing down pretty soon. If you like this video, hook up a like. My goal here is to teach you something about investing. I know a lot of people this year are starting, and I think it's very key to learn as much as you can. You're not going to be an expert right away, and over time you're going to learn. So I hope there's some facts in this video that really helped you and got you going. There's way more to learn, so stay tuned for more. And if you really want to see more of my videos, hit that subscribe button just like Easy Money Vlogs just said. I'll say it again though. And yeah, I appreciate you being here watching it with me. I'll see you on the next video. Have a good one.